I want to thank everyone, first of all, for joining us today on the TradeXchange weekend webinar. We're going to be going through the week of October 3rd. Just to give a brief breakdown of last week, markets ended the week down about 3% across the board, down 6 times in the past 7 weeks. All 3 indices are currently in a bear market territory. This year, the NASDAQ is down over 32%, S&P down about 25%, and the Dow is down over 20%. We mentioned last week to keep an eye on Europe, as things on that side clearly are not doing well. We heard some comments by ECB's Lagarde saying that the outlook in Europe is darkening with more rate hikes ahead. We also saw the key headlines, in our opinion, that dictated a lot of the moves last week with those headlines out of the UK government instilling a plan for tax cuts and spending increases on borrowed money, which in reality collapsed the British currency, which prompted the BOE to try and stabilize their markets. So you're stuck in the conundrum when the government is trying to, cut and spend more money, when in reality you have such a large inflation impact on the everyday citizen. The BOE had to step in and try to stabilize their markets. We did see that reverberate into the other international markets as well as the U.S. markets throughout the week, which did see some volatility on our side. The 10-year yield hit new highs the past week, right by that 4% level, highest level in 14 years. This week, we also did have some inflation data points with the PCE index, which the Fed uses as its main gauge on inflation metrics. That report came in hotter than expected, which gave the markets more weakness to end the week. In our opinion, the markets wants to see weakness. Oh, correction. This week, we do have the employment report on Friday. As we all know, the employment side has been strong across the board every week upon week, even with the initial claims data. So in our opinion, the market wants to see weakness in this report. Even though it does hurt the economy, it gives traders and the market some ease that maybe the Fed will not be as hawkish in the coming weeks because their mandates are actually working in regards to the inflation side. In all reality, we do not want to see unemployment higher. But in the Fed's case, even though they don't say it, that's what is needed to bring down inflation and hopefully calm markets. Also this week, yet again, another fun-filled week with Fed speakers, at least one every day this week. So we'll go through this week what we're looking at in regards to the market, economic data, Fed speakers. This week, not much on the earnings side, but earnings season is approaching little by little. We do have earnings this week from Levi, LEV, and McKesson, MKC. On Monday, we'll be watching on the U.S. side, the ISM and PMI manufacturing final. Australia has their RBA announcement. U.S. Monday and Tuesday, we do have motor vehicle sales, Fed speak, and on the European side, we do have some finance ministers meeting. On Tuesday, we do have JOLTS job openings, factory orders. We also have Fed speakers again. We have 1, 2, 4, at least 4 speakers scheduled on Tuesday, 3 scheduled for Monday. We also have the Japan PMI composite. On Wednesday, we have the ADP employment report and international trading goods. On the European side, the UK, Eurozone, and Germany have the PMI composite final. Fed speaker schedule, we have Fed's Bossage and members, the OPEC meeting begins. This morning, we had headlines that OPEC will even consider an output cut of more than 1 million barrels. So it's interesting. Last week, we saw a little weakness in oil as there was some circulations that they were only looking around a 500,000 cut. So we did get headlines this weekend, as even this morning, that a possibility of over 1 million on that OPEC cut. So it'll be interesting to see how crude oil reacts to these headlines on the futures that open this evening. Thursday, we have the ECB minutes and retail sales on the Eurozone side. Fed speak, Evans, Waller, and Mester. Friday, the all-important the employment report and consumer credit. We are waiting to see how the employment numbers will correlate into anything that the Fed will say. or any change in direction if we do see a weaker employment report on Friday. Friday also, we do have Fed Speak Williams, and we also have the EU Leaders Informal Summit. We are seeing a lot of these informal summits on the European side, even through the Ukraine-Russia war, but even more recently following these continued headlines in regards to the ECB and their very cautious tone on inflation and energy in the whole European Union. So it'll be interesting to see any feedback following that summit. Company events for the week, as always, top shareholder analyst calls for the week. Top conferences, not that busy of a week on the conference side. As always, members, if anyone has any questions, you can always shoot us an email or reach out to us via Ask the Desk in the news desk for any specific questions about these conferences. Economic calendar. So you see a lot of red on the board again. All these reds are Fed speakers. Monday, Fed speak Bostic, Barkin, George, Williams, and Bostic again. On the economic side, we have PMI manufacturing, the ISM manufacturing, and construction spending. On Tuesday, Fed speakers again, Logan, Williams, Mester, and Daly. What we're looking at on the economic side, keep in mind this is a little misprint here. This is supposed to be up top, but we'll be watching the factory orders and the JOLTS job openings. Wednesday, one Fed speaker scheduled. Keep in mind these people do pop up throughout the day. We have one person, Fed speak Bostic, scheduled. On the Wednesday side, we'll be looking at the ADP employment report, PMI composite, international trading goods, and ISM services. Oil traders, keeping an eye on the EIA petroleum report on Wednesday, as always. Thursday, we do have more Fed speakers. We got Evans, Waller, and Mester. On the economic side, we'll be keeping an eye on the jobless claims. Friday, the all-important employment report at 8:30 a.m., followed by consumer credit. And we have Fed speak John Williams. International calendar. We have a lot of Germany and Eurozone headlines coming. So it'll be interesting to see what the European footprint will be on the economic side for the week. Earnings, not much on the agenda for the week. Your fear and greed, we're on an extreme fear mindset with 15. One of the key low points for the year at this point. So we're keeping a close eye on the sentiment, I guess you can say. And the trader sentiment right now is on the extreme fear mindset. Looking at your weekly sector performance, we do see some green energy with up about 2% on the week. Weakness still continues across the board on every other sector, with utilities down over 8% on the week. When did we ever see such volatility in the utility sector? I cannot recall, but we are seeing a large move in utilities for the week and for the past couple of weeks on the utility side. In easy comparison, markets are trending right back to COVID levels, pre-COVID levels, especially on the Dow and the Russell. So we'll see if this weakness continues this week with the employment report and the continued Fed speakers. Looking at your probabilities for the November meeting, basically split down the middle for 50 basis point to a 75 basis point. You're going to see this number, members, change dramatically, I believe, by Friday when that employment report number comes out. So we'll get a better indication next weekend when we go through the weekend webinar on this, on the probabilities for the rate increase in November. Year-to-date percent returns, VIX up 10%, nat gas, not really much of a move. Heating oil, not much of a move. Wheat saw a nice jump, over 6% on the week. Corn, upside move about 1%. Gas, not much of a move. And crude oil, not really much of a move. So we didn't really see that much move in the energy commodity side, which correlated to that energy sector strength for the week. Looking at the negative side, coffee, not much of a move. Gold saw a little pop this week. Platinum, not much of a move. Silver, same thing, not much of a move. But the indexes, Dow saw weakness. Copper saw strength. S&P weakness. Cotton, though, did see a drop of about 7% this week. And and lumber, not much of a move. So commodities really didn't make that much of a move this week. It was more correlated on the overall market. Your AAII investor sentiment survey. Bearishness again. This is probably one of the few times in history of the investor sentiment survey where we saw 2 weeks in a row over 60% bearishness. So one interesting aspect, though, we did see a little pop on the bullish side, a little drop on the neutral mindset, but still that 60% number, members, that number, we've been watching this for quite some time, and we don't recall a period where we've seen consecutive weeks above that 60 point. Sector outlook, as always, utilities was green last week. That drop brought it down to a red on the year to date. The only strength continuing in energy, which is still up about 31% year to date. Weakness, communication services down 38%, real estate 31%, info tech down 30%. So we saw weakness across the board in all these sectors, members. So it's interesting to see how that will correlate moving forward. IPO lockup expirations, not much at all for the week. Expected IPOs, seems like it's another slow week. We are expecting ALPX, but not much on the agenda. FDA calendar for the week. We do have some on Monday, Tuesday, Thursday, and Friday. We'll be keeping a close eye on these specific names on any of the FDA headlines. Taking a peek now at your charts. A lot of people always ask us about our charts, and here they go again. The SMH. Last week, we added a new level of support at the 180 mark. Once that level broke, we saw weakness continuing. A correction on the 190 mark last week. When that 190 broke, we saw weakness continuing at the 185 level. We had to actually extend the chart for the SMH this week, and we added another support level at the 180 level. Look at these trend lines, members. It's following the trend. This downtrend on the SMH was touched, 5 times and never broke. So it's a clear negative move on the SMH. We'll see if it does look to base out this week and hopefully break back above that 190 level. As always, once the support level is broken, it becomes a short-term resistance level. So we'll watch those levels going into the week. SPY. We had to extend this as well because of the new years that we saw. So we are looking at the SPY on a daily. No change to the chart. That trend line to a T again. That was tested 3, 4, 5 times as well on the downtick. This is a 3-year daily chart. So we are seeing multiple tests on that downtrend that was extended for the week. So we'll be watching these levels, watching these support resistant points, and keeping an eye on this downtrend right here. If this downtrend is broken, look at last time when the uptrend was broken. It was a clear technical move to the downside. We're watching this downtrend break, and we'll watch and see if we do see a possible base to an upside move. But as always, members, with this market, it's like, who knows? So we'll wait to see how the week goes and figure out what the next move will be in the market. If there are any changes, as always, we'll mention it in the news desk. Taking a peek at your SPY on a 3-year weekly basis, 3 lines tested on that downtrend. So it's a continued technical move. Last time we had 4 or 5 week uptrend broken to a 6-week downtrend that we'll be watching, but we are keeping a close eye on this weekly, and we'll see how it correlates with next week, if it continues on the downtrend or we do see a base or a upside move. Looking at your S&P on a weekly basis with the moving average look, we are seeing continued weakness. Watching this trade right to your 200-day moving average on your S&P. So we'll watch that. A lot of traders, technical traders, watch that as a long-term play in regards to a directional move. So we'll see how it moves, if it can correlate and stay around that level, or you are seeing a 200 moving average break. Looking at your triple Q daily, as you saw, once that downtrend was, the uptrend was broken, we did see continued weakness, trading right at support on this on the triple Qs. So even though we do have all negative indicators on the moving averages, this is one indicator that we like to see support test for the week, and we'll see if it can correlate into the week ahead. IWMs, one area in IWMs that really hasn't broken your June lows, but we did see that uptrend break. We did see that week is coming and trading right at support levels that we're looking at. Like we said before, your moving averages are all negative. Look what happened when you did see the negative turn, the upside move. Upside moving averages saw continued strength. Once the top started to level out and we saw the downside move, the weakness is there. So right now we're watching the moving averages for any indication on an upward move. Your 10-year yield weekly with a moving average, just look at the chart. It's a pure technical move. All moving averages crossing to the upside, all moving averages bouncing off of lows, testing that resistance level at 4%. So we're going to keep a close eye on this week. This week, we believe, could be a key indicator on either a test to that 5% level, 4.85%, or a move back to the 3.2%. Another breakdown of the 10-year yield weekly. This is, I don't know how more clear of a technical play this could possibly be. Once the downtrend was broken, no changes to the chart, members, by the way. Once that downtrend was broken, we saw straight continuing to highs. So we are watching this continuing. That 4% level was a resistance point that we had there for some time, actually. Tested it, bounced off of it, closed at 3.804%. Uptrend still in play. We are watching this uptrend, and we'll watch them on the 3.6 level for a possible downtrend, a correction uptrend break. So we are watching the 10-year yield, as we've been saying for weeks on end. I can't even recall how many weeks we've been saying it. The market is trading off the yields. Anyone can tell you whatever they want to tell you. From what we're looking at, this market is trading off the yield. And once that started to turn after the June, we're watching the test of those 4% highs, yield, US dollar. And now the scary part about it is we have to add in Europe. We'll talk about that at the end, though. Europe is another area that we have to watch now in regards to how it affects the US markets. Continuing on charts, IWM weekly, ending right at support levels. No change to the chart, members. We are watching these downtrends. They're clearly at a much higher rate on a weekly basis. So we'll keep a close eye, but currently is trading right by that gap at this point. Did fill it, traded back to it, leveled off there for now. We'll see how it correlates into this week. HYG on a daily, negative across the board. Once it broke support levels, weakness, tested support, resistance, correction, did not break it, weakness, tested support here, could not stand it, broke it, hit new lows. So watching the HYG, trying to see a similar type of a base here, and we'll see if this continues throughout the week. Looking at your euro, we added a euro. Why did we add a euro? Because everyone's talking about the euro now. We're looking at a 15-year weekly chart on the euro. What we see interesting is a downtrend that is tested 5 times, 1, 2, 3, 4, 5 times on a downtrend. So we are keeping a close eye on this downtrend for an upside break. That it's around that $1 level now, parity. We'll be watching if that is tested. As we've been talking about the dollar strength correlating to weakness in markets. But keep in mind, members, every Fed speaker that we listen to says the strength in the dollar should benefit inflationary issues in the US. So, the question comes down to is if we see weakness in the dollar, is the Fed going to continue saying, well, the strength in the dollar is helping inflation? What happens then? We're going to keep an eye on it, watching the euro, watching parity for a possible upside move in the euro. VIX weekly continue to be in that little pattern between that 20 to 35, 40. We haven't seen that fear spike. This is COVID. This is the fear spike that eventually markets based and turned. So some traders are waiting for a high print fear spike with the VIX, the volatility index. People call it the fear index. It's the volatility index. We are watching for a 35 to 40 print, possible break up to the upside for any indication, but for now, it's still trading in that support resistance level. Oil daily. We'll see how oil does this week, especially with the OPEC meeting. But we are watching crude oil tested that downtrend. So we are watching that for an upside break. No changes to the chart. Last week we did say 75 level is support. Tested it 3 times. Boom, here, here, and here. Bounced off support. Tested the downtrend for a possible upside move, but sold off. So we're watching this technical chart for any indication move to the upside. Then we have the US dollar. No changes to the chart. Once that uptrend was broken, members, we did see that uptrend break a few days ago, last week. We did see the weakness in the US dollar, but still trading right by highs. We are watching the secondary uptrend, which was tested but not broken, and bounced off and closed above it. So we're watching this level. If we do see another break, we could see that test of the 110 supports, the 108 to 110 area. We'll keep a close eye on the US dollar, as we believe this could add volatility to the US markets. Lastly, Bitcoin daily. We added a new support at that 18,000 level. It seems like it's trading around that point. Yet again, tested that downtrend. 1, 2, 3, 4, 5 tests on that downtrend, but sold off again and ended around 19,300. So we are watching the 18,000 support with that 20,000 upside and that downtrend that goes back to November of last year. So that's your weekend in review, members. We'll open it up for a few questions. Like I said, some members emailed us some questions because they couldn't be around today. We'll get to those as well. And if anyone has any questions, please just shoot them in the news desk, and we'll answer those. We're going to go radio silent for a few, and then we'll follow up. So we did have a few questions, Eric, as well as a question. We'll answer the other ones first, and then we'll jump to the other questions. We had a few questions in regards to our thoughts for the week coming up, in regards to market or any impact on the economic or Fed speak. In our opinion, members, since earnings season is not yet upon us, the only thing that we could watch clearly is going to be on the economic side is going to be the employment report on Friday. Seeing that impact, we've been hearing a lot of headlines of companies laying off people, hiring freezes, continued commentary about restructuring. So we'll see if that has an impact on the employment report. As always, we hear nonstop on a daily basis that, in a way the Fed doesn't say it, but the Fed is looking towards, a drop on the unemployment side in regards to an uptick on the unemployment rate to control a little bit more on the inflation side and wage pressures. So we're going to keep a close eye on the economic side, data point side. on the employment report. One other interesting report on the week is that JOLTS job openings. When Yellen was the chair, that was one of her most important economic indicators on employment. So we're going to watch that JOLTS number on Tuesday as well to see if it has any correlation to any market activity. And then, as always, this week we're flooded again with Fed speakers. So we're going to keep an eye out on these Fed speakers, any commentary, any change of commentary. The continued mentality right now is a hawkish mindset. So we'll see if there's any change in commentary throughout the week following, last week's amount of Fed speakers that continued to stay on the path of inflation is key. We must do it. We must fight it in any way possible. And they will continue to fight it no matter what happens, even if it does impact markets. Even if we do have a recession, they will continue to fight and raise rates to fight inflation. We have one other question, then we'll jump to Eric's question. I just got to get the other question from our emails. Just give us one quick minute. Okay, so it seemed like that we hit both answers with that last question. Eric asked the question, can you repeat what how the Fed says about dollar in relation to inflation? So when it comes to the US dollar and inflation, the mindset is the US dollar strength brings down domestic inflation. It lowers cost of imported goods. So if we have a strong US dollar, the imported goods come in lower, which does benefit the US when it comes to the inflation side. So with strength on that aspect, the Fed continues to see and want to see strength, because with the strength in the dollar, even though that affects every other country, it benefits the US when it comes to the inflation side, because it lowers those costs of those imported goods. That's why a lot of traders are watching your trade in goods and all these overseas import and export prices, because those affect inflation as well. Everyone always kept, the only mantra in the past was, employment report is the key indicator. Some indicators that we didn't even care about years ago are some of the most important indicators nowadays. Import and export prices, the trade in goods numbers, PCE inflation, personal income and spending. So that is how the correlation between the US dollar and the effect it has on the inflation in the US. So if there are any other questions, let us know. But for now, I think we have, we did a pretty long one today, so we're going to try to cut it short. I know it's a Sunday. We got football coming up, and it looks like an interesting day on that aspect. So for now, thanks everyone for joining. As always, you can reach out to us via email or ask the desk. We got a lot of new things coming to the news desk in this quarter. Actually, it is October, so we got a lot of new updates coming in regards to a new Squawk, which is going to be so much better than our current one. We have the community room coming out soon, so we got a lot coming. Keep updated on the emails in regards to any of the updates. And thank you everyone for joining, and have a nice rest of the weekend. TradeXchange out.